How much doom do you predict there will be?
Well, first, thanks for having me. Excited to be back.
Good to have you back.
At first, we take the situation very seriously, especially because people's lives are potentially at stake. We also don't really have the full picture yet. So the best thing that we can do, really as a community or everybody, is to be prepared. And so we're advising our companies to do two things. One is work from home as much as possible. So you mentioned Slack, Zoom, these are household names now, but there are products like Loom, Figma that help people collaborate and work remotely. And most companies are fairly distributed these days as well, so doing more of that helps prevent. And two, from a long-term perspective, generally speaking, we tell all of our companies to be prepared for an up market or a down market, to know what the levers are in their business, to know how to react, whether to contract or expand and step on the gas. And that's just really good, prudent advice, I think, for any firm at any time.
Why would Slack and Zoom be suffering right now?
Well, I think there's generally volatility. I think there's a lot of uncertainty, and I think the uncertainty is really the key issue here. I think it's all a question of time until we see more data.
Sequoia, one of your competing venture capital firms, just released this big memo saying they're seeing growth rates drop at portfolio companies, telling companies to be adaptable. They said, quote unquote, it'll take considerable time, perhaps several quarters, before we can be confident the virus has been contained. It'll take even longer for the global economy to recover its footing. Would you agree with what they're telling entrepreneurs right now?
I think high-level sound advice. Again, there are some businesses that are going to be impacted more than others. Companies with supply chains, especially in affected areas like Asia, will definitely take a hit. More digital businesses, I think, have a bit of a buffer to react. And really, I think our message is take precaution, stay calm, and prepare for both the best and the worst.
They're comparing this to Sequoia's RIP Good Times memo in 2008, the height of the financial crisis. I mean, would you say it's that bad, or is that an exaggeration?
I think it's an open question right now. I think it's hard to tell. I think if you look at various levels of analysis, it could be bad, but it could also not be as bad. So again, the best thing we can do, prepare for the worst, but expect the best, and just stay calm.
Same time, Elon Musk tweeted in the last couple of hours, the coronavirus panic is dumb. Reaction, please.
I think my biggest issue is there's a lot of sensationalism. I think what we should do is, again, take precaution, follow the methods that people outline, no more handshakes, work from home, and monitor, because what we don't want is we don't want an overreaction.
Meantime, you have $700 million to invest. If you think about it, companies like Airbnb and Uber were born in the financial crisis. So how do you find those opportunities in the midst of all of this uncertainty? Or will there be opportunities?
Look, now is probably one of the best times to be in venture capital and in tech. It's easier than ever to start a company. The quality of entrepreneurs, the quality of businesses we're seeing is better than ever before. There's just more capital, there's more data available to these companies. And when we invest in enduring companies. So you mentioned a couple of companies that have been built over a decade. If you look at the historical giants like a Google or a Facebook, they might have also started in some low times and then endured over multiple decades. And it's these enduring companies and businesses that ultimately persevere and persist through ups and downs. So we try to find those independent of where we are in the macro cycle, because that's pretty hard to predict.
What's your exposure in China right now?
So we had a few funds in China. At this point in time, with Kleiner Perkins Fund 19 and really with 18, we've gone back to our roots of focusing on early stage in North America predominantly, across a few core sectors like enterprise, consumer, hard tech, fintech, and healthcare.
So no more China funds?
So for now, we're keeping an eye, we're watching it, but we're back to the basics of early stage venture capital.
Now, as you mentioned, Kleiner's had 19 funds, and there's a long history, a long and storied history. You are part of the new Kleiner. A lot of folks have left and a new guard has come in. How would you describe the new Kleiner?
So when we raised our first fund as New Kleiner, which was Fund 18, our sort of motto was back to the future, because really back to the basics of what made Kleiner Perkins great in the beginning. It was a small team, technologists who were focused on helping people build companies, very fast at decision making, and really hyper-focused on stage, early stage, the seeds, A's, B's, sectors, enterprise, consumer, hard tech, fintech, healthcare, and just really heads down helping people build their businesses.
Kleiner did have a lot of prominent women who have since left. You don't have any female partners, as I understand it. What's happening there?
Yeah, amazing history of amazing partners, whether it's Mary Meeker or Beth Seidenberg or Lynn Chow and Eileen Lee and many more. So we care about diversity very deeply, and we want to bring in and have people inside the firm who represent the diverse audience of our companies. All of us as partners have been groomed and kind of brought up inside of venture firms, and we actually have an amazing next generation. We have Annie Case, Monica Desai, Josh Coyne, Hao Miao Huang, who are the next iteration of the Kleiner Perkins team. And actually, we're excited in this fund cycle to promote Annie, Monica, and Josh to principal. So we deeply believe in both grooming from within and being thoughtful about bringing in from the outside.
So there will be women in the new Kleiner.
There are women in the new Kleiner.
So, you know, we don't know what's going to be happening in the next hour, as I say. You know, how does that work for you as a venture capitalist when you have to make decisions now, but you're investing for the long term, but there are so much uncertainty right now, macroeconomically?
Our business is to be in uncertain markets, again, because the enduring companies, the amazing companies, they really persevere through ups and downs. And I think it's the fundamentals like amazing entrepreneurs, big audacious vision that's a bit contrarian, a massive opportunity. And I would say that the opportunities today are bigger than they've ever been before. If you look at a Square or a Shopify or an Atlassian or a Slack or a Zoom, these companies have gotten to tens of billions of dollars of market cap in a very short order, much faster than their predecessors. So now is actually a pretty amazing time to start companies.